Hello and welcome back to Live from Paris. It's time now for business news with Matthew Warren. And Matthew, going to start off with an important step for the Chinese currency, which is happening today.
That's right. The Chinese yuan will be trading for the first time directly with the Japanese yen. That's a difference because in the past, any trade between those countries has to go via the dollar. So this is quite a big move for China. And our correspondent in Beijing, Shannon von Sant, told us earlier why that is.
Well, it is fairly significant. For one thing, it forges greater business ties between China and Japan amidst territorial disputes, amidst other tensions in the region. It's also significant because China is trying to foster the use of the yuan internationally in parallel with China's economic rise. And it's also significant because China's currency has faced a lot of criticism, especially in the last 3 years, because people criticize it for contributing to the trade deficit that China has with Western countries like the United States.
And staying with China, we've also had some data in on the manufacturing sector there, not entirely positive. 2 sets of PMI data which shows the health of the manufacturing sector. One of them says that it's down to 50.4. Anything above 50 is growth, but anything below, as the other PMI index has shown, is a contraction. So that's raising fears about a slowdown in the Chinese economy.
OK, we're going to move back to here in Europe now because the Spanish Prime Minister, Mariano Rajoy, has consistently denied that his country will need a bailout. Now it's the turn of his deputy to do the same. She's been in Washington, where she insists talk of a bailout isn't on the table. Here's more.
It was just a coincidence. Spanish Deputy Prime Minister Sáenz de Santa Maria said her visit to Washington did not mean her country was seeking financial help from the IMF.
It's a coincidence. I'd scheduled this trip to Washington months ago, although it turned out to be an opportunity to let decision makers here know about the huge efforts the Spanish people are making, not only to come out of this crisis, but to come out stronger.
Head of the IMF, Christine Lagarde, confirmed she had not received a request from Spain for a bailout of any sort. The country is facing growing borrowing costs with 10-year bonds reaching 6.7% interest rates. Greece, Ireland and Portugal had to ask for international financial aid after crossing the 7% threshold. Investors are also starting to wonder where Spain intends to find the money to help its banks, including Bankia, which says it needs some 19 billion euros to continue running. In an attempt to ease market pressure, the European Commission gave Spain an extra year to cut its deficit to 3%. And on Thursday, Brussels suggested the future European Stability Mechanism be used to help out indebted banks.
We're analyzing the possibility right now. U.S. Treasury Secretary Timothy Geithner has said we're working in the same direction to find a solution for the banks. This problem is not about Spain as a country, but that at any given moment our financial system has needs. And other banks in other European countries have similar needs at this time.
The European Commission also made it clear banks could be forced to create a new special fund to help European authorities and governments bail out establishments facing financial difficulties.
Well, the Spanish Deputy PM in Washington there. And staying in the US, markets are going to be very keen to see what the unemployment report for May is today in the US. We had an advanced taste yesterday with figures on new job creation in the private sector. There was an extra 133,000 jobs added. That was a bit disappointing for markets, though. We also had the weekly jobless claim figures. Those were up 10,000. So that all of that sets the scene for a job report today that may not be that good.
And what about here in Europe? How are the markets faring so far?
Well, let's take a look. European markets are just opening, so we can see what's happening there. And they're sort of pretty flat at the moment. Frankfurt just slightly down, but of course, a long day of trading ahead. Let's just give you as well some more of those PMI figures, manufacturing activity figures for France. 44.7, as I said earlier, anything under 50 is a contraction. That's not good. That's the lowest since May 2009, actually. We can also take a look at Asia and how markets have closed there today. Bit of a mixed picture. The Nikkei down, but the Hang Seng in Hong Kong making a few gains. Well, now let's pick up on some more of the day's company news. And BP has announced it's going to sell its stake in its Russian operation. Earlier this week, the CEO of the TNK-BP joint venture resigned suddenly. BP's been in a dispute with its partner in the venture, AAR. It blocked a planned deal BP wanted to make with Russian oil giant Rosneft.
The group that runs Formula One races is delaying its planned flotation. The group had planned to launch a $2.5 billion IPO on the Singapore Stock Exchange this month. The listing's been pulled, though, due to choppy market conditions. It's the latest in a series of flotations to be pulled in the last week as companies take fright at falling stock markets.
And Facebook investors who expected a first-day pop in the shares were naive. That's the view of the boss of Morgan Stanley, James Gorman. He said in a television interview that anyone expecting immediate gains bought under the wrong pretenses. Facebook shares have fallen 20% since the flotation. They managed a late-stage rally of 5% on Thursday.
Now, a row has broken out over a bonus paid to the former CEO of the Air France KLM. Yesterday, shareholders voted against the €400,000 payout, and France's finance ministers also weighed in on the debate.
They want the cash back. Nearly 8 out of 10 shareholders of Air France KLM voted against the former general director's retirement bonus.
We're satisfied because it shows there's still some sense of goodwill.
I can't see why there should be such large sums given out to some people who already have a very good salary.
But Thursday's vote remains largely symbolic. When he left the company last November, Pierre-Henri Gourjean was awarded a €1.1 million severance package, and to this retirement deal was attached a non-compete clause worth €400,000. France's new president wants to cap top salaries in public companies, and the state's representatives on Air France's board voted against the bonus. Still, shareholders cannot legally force the former director to hand the cheque back. But it's really a question of bad timing. Air France is looking to save some €2 billion in the next 2 years, and many within the company will be asked to make sacrifices.
They asked everyone to cut spending, and I think employees understood that. We, the trade unions, accepted a salary freeze in 2012 and 2013, but to hand out at the same time €400,000 to Mr. Gourjean, who didn't really do much for Air France, that's just unacceptable.
Across the Atlantic, American Airlines declared bankruptcy on Tuesday, and with shareholders and unions breathing down his neck, the company's CEO Gerard J. Arpey resigned and announced he would walk away without a severance package.
Well, as Alexander said in that report, the former CEO doesn't have to hand back the money, but the finance minister has weighed in on the debate. Pierre Moscovici has said that he should give the money back for moral reasons. So we'll see what happens on that whole drama.
And another thing we're going to see and what happens about is Ireland. They voted yesterday on the fiscal compact. We're still waiting for the results of that. But in the meantime, it seems some residents are rather missing the old currency.
Yes, that's right, Lorna. We'll get those results, of course, later today. But yes, there are some residents of a village called Clones. I hope I've said that right, or Cloners maybe. But they've decided that they are going to use some of the Irish punt. Now, in fact, it's still legal tender in Ireland, and they're hoping it's a good way to stimulate their local economy. Let's take a listen to Tony Morgan, who's the man who came up with the scheme.
This scheme was introduced just to get people moving, get money moving again, get money into the local economy that's not there. People are unhappy with the austerity, they're happy with cutbacks, just total disenchantment, disbelief with the whole system, with what has happened over the past 3 or 4 years.
Well, it's apparently quite a few businesses involved in that now, so it could take off, you never know. Thanks very much indeed, Matthew, for that look at today's business news, and that's just about it from us for now. But do stay tuned, Chris Moore will be here after the weather with more news headlines.